name's Thom. I'm a fund manager with Aberdeen's Asian equities team based in Singapore. I've been in Asia for 19 years now, and my responsibilities are managing both Asian equity portfolios for Aberdeen, but also our India strategies, including the Aberdeen New India Investment Trust, where I'm the co-lead manager. The investment objective of the Aberdeen New India Investment Trust is a simple one, or at least simple to say, and that is long-term capital appreciation. And we do that through applying a long-term quality process and trying to build a portfolio of the highest quality stocks in India from the bottom up, creating an active, high-conviction portfolio that gives you both upside participation in the exciting India growth story, but also solid downside protection. And over the last 10 years, the Aberdeen New India Investment Trust's net asset value has increased by 2.5 times. As I mentioned, we have a long-term quality investment process. So we are building the portfolio from the bottom up, selecting the highest quality stocks within the India universe. What do we mean by that? Well, we're looking for companies that are typically market leaders within their sector. They will have a clear source of competitive advantage, competitive moat, if you like. And the work we do is to ensure that that's a sustainable competitive advantage that they have. Typically, they'll be generating superior financial metrics, whether that's profitability, return on equity, and cash generation is really important to us, as is the strength of balance sheets. And really what we're looking for is companies that can continue to deliver sustainable growth through a cycle, give you solid downside protection when times get tougher, but also, as I mentioned, enable you to participate in the growth story that is India. So we are bottom up in our process, as I said. However, we do take a sector view when constructing the portfolio and looking for ideas across the India universe. At the moment, there are really three key sectors that we're excited by, and both are tied to a strong recovery in cycles that we're seeing at the moment in India. One is in the credit cycle, and so we're seeing loan growth in the banking sector come through quite strongly. And so we're positioned the portfolio quite heavily in banks and financial services more broadly. The second is the real estate cycle. India's been through a prolonged downturn in the residential property sector, but now we're into the early stages of what we think will be a prolonged upturn. And so we've also positioned the portfolio around that theme. And then the final one is around the capex cycle. And we're seeing the government in particular at the moment put more and more spending into infrastructure in India, and that is driving growth opportunities there. And we're hopeful that over time, in the next 2-3 years, that we'll also see a revival in the private sector capex cycle too. And so we're trying to position around that through quality names. So I've long been a self-confessed India bull, and India's been through its ups and downs, but I genuinely feel that it is home as a stock picker to some of the highest quality companies in the Asia region. There's some fantastic businesses, really entrepreneurial and capable management teams. And so within our broader Asia portfolios, we've long had an overweight to India. And from a more macro standpoint at the moment, I think the stars are very much aligning for India. We've talked about the sort of three cycles in credit, real estate and infrastructure, but we're seeing all of that is helping propel higher GDP growth for the country at the moment. And that's feeding through to earnings growth. And we're in the midst, so about to go into a general election, and the expectation is that Prime Minister Modi will win a third term, and that will mean political continuity and continued reform, all of which I think will be supportive for India as an economy, for its companies, and for the stock market.